Hey all, good afternoon. So, not anything spectacular that has really happened during the past couple of hours. A little bit more, we've more or less left things where we finished the morning edge, meaning the dollar had a retracement. Depends on which pair you're looking at, from a little one or to a decent one. For example, here's the Aussie. It has pared back most of its losses, but in the opposite side, for example, here's the euro. It's still decently negative on the day and not that far away from its lows. And the euro is the main reason why the DXY is also looking rather good, because if we excluded the euro from the DXY calculation, the DXY would have been significantly lower in the day, because the rest of the currencies are not that much under pressure. In any case, which personally tells me that the market might have started considering a little bit the possibility that buying the dollar as a result of higher inflation, because it considers it a given that that translates to more hawkish monetary policy, might not be the best of ideas. So, it makes sense to see investors starting getting, a little bit less convinced about this approach. Personally, as I've said before, I think it's a matter of time until we get to the point that higher inflation data will immediately mean lower dollar, as it should be and as it used to work for decades. Whenever you had higher inflation in any country, the immediate response was a depreciation of the currency in the FX market. So, this is basic economic logic. But as I've said, things have really turned around upside down in today's markets. But in any case, this lack of follow through so far might be indicating that some investors have started rethinking this approach. Of course, there is some distance between not showing follow through in strength and showing actually, weakness the moment we get higher inflation data. But you know how it is. You can't. Usually, you need some, to cover some distance, going from point A to point B. In any case, I don't really see something that has substantially changed. I forgot to mention crude oil before, by the way. Crude oil remains very well bid, and the higher we go, the higher the possibility that the corrective move that was unfolding or is unfolding, we're about to find out, I guess, might be more again in the context of time than in the context of price, which on itself is going to show extreme strength in the crude oil market. And it makes sense. I mean, we're seeing solid evidence that the dollar, specifically because the situation with the inflation in the developed world is by far worse in the US, right? So we're seeing, clear evidence that the US dollar is losing its purchasing power. And, we're looking at crude oil depicted in dollars. Don't forget that the last time that we had the major oil crisis, the prolonged one in the 80s, was again the result of higher inflation and the depreciating dollar, right? So it's not easy to be bearish crude oil as long as we remain above 69.50. So keep that in mind. Now, of course, it's also not easy for crude to go straight to new highs, but something like that might be unfolding now. We might get something like a little triangle unfolding here or whatever. We're going to need more time to find out, which means that once again, I wouldn't be chasing it here. I wouldn't be buying it. But on the other hand, it's very hard to sell also. Now, it's also somewhat positive, at least having to do with market participants' maturity, the fact that we're not selling off in precious metals, which used to be the immediate reaction once we saw higher inflation. So that might also be a leading indicator, in essence, that the market is changing slowly its concept. The normal thing to see is higher gold and silver, but not usually we see normal nowadays. In any case, I'm still monitoring this megaphone formation in the case of gold. We're testing the trend line resistance once again. If we get rejected from here, fine, we still can see a new push lower before we see the longer term uptrend reestablish itself. In the case of silver, silver is definitely on the weaker side in comparison to gold. The common thing is that it's also consolidating in a megaphone formation. So, also in the case of silver, until proven otherwise, I would find it very likely to see a short-term move lower before we can finally reestablish the uptrend. And of course, unsurprisingly, right, we see the GDX consolidating, quite lower than the recent high, and the SIL within the context of this channel in the middle, a little bit lower than that. This is what we drew some time ago. That we could see a rejection, a move lower, and now where the move lower finds support, there were like three good technical alternatives. One of them was this support area, roughly at 41.50. The next one was this support area, also the 38.2 at 38.70, 38.80. And the third alternative was all the way back to the channel trend line support, which of course, since it's a descending channel, of course, every day it pushes slightly lower, but currently passes roughly from like 36.5, right? In any case, the medium to long-term thesis hasn't changed for any of them, for gold, silver, GDX, SIL, GDXJ, SILJ, which is the gold junior miners and the silver junior miners. And it's definitely going to be a positive sign if we've already found the low, right? It's very early to say, but who knows? This time around, the gold market, gold miner market, silver miner market might lead the dollar's next move lower. I wouldn't be very much surprised, to be honest. Pretty sure the people that are buying gold and silver, given current circumstances, are, sorry to say, smarter than the people that are buying the dollar as an immediate response, right? Or buying other type of assets that yield diminishing, low and ever diminishing returns in a depreciating currency. So who knows? Perhaps they're leading the charge, and we're close to other people realizing the economic reality that's staring them in their face, because it's literally staring them in their face. I mean, it's so clear that sometimes I get surprised how people can't see, the elephant in the room, right? Because we're talking about a huge elephant. It's a mammoth. It's not even an elephant anymore. In any case, technically speaking, despite the initial reaction lower, there hasn't been like a significant technical event we can talk about. Meaning, has, for example, the euro broken down? No, it hasn't. It's still holding within the symmetrical triangle. Yes, it pushed significantly lower today, but technically speaking, no new event to talk about. Has the Aussie or the Kiwi, with the trigger being the CPI data, broken through their recent consolidation in one case and descending wedge in the other case? No, they haven't. Has the USD CAD broken higher? No, it was already, it had already broken higher prior to the inflation data. The only actual technical event here is that the CPI data and the reaction just helped the USD CAD not end up producing a false breakout. Same with the USD NOK. So technically speaking, there hasn't been a development following the CPI data that has changed, like some kind of a technical event that we can now pinpoint and say, okay, following the CPI data, this is what happened, which we didn't have before. So, I could easily try to be the cheerleader here, but I'm disappointed to say that so far I'm not seeing like the reaction that would get me looking to immediately trade something, right? I mean, what we had before, meaning a very cautious, underwhelming, in danger type of recovery in the dollar resumes. But I'm so much afraid that this might be very short-lived that I wouldn't be trying to ride this in the opposite side. You know what I mean? I can't possibly find myself either looking from the perspective, from the top-down perspective on an economist, looking, finding any excuse to buy the dollar ahead of inflation that is now approaching 6%, which is like unprecedented for recent standards, like completely unprecedented. Or even from a technical perspective. I mean, look at the DXY's bounce, right? Right. Where's the impulse here? Where's the enthusiastic move with momentum higher? We've spent so much time trying to rebound, and we still haven't even managed to tag the previous corrective high at, what is it, like 93.40, 93.45, whatever it is. And we struggled yesterday, like to barely, like more or less hold this ascending wedge. We're already seeing RSI divergences. And all that despite euro being the weakest of the currencies against the dollar. And I'm saying that because, as I've explained before, euro consists, the DXY is consisted 58% by the euro. So you have the biggest currency in the basket being the weakest, and still the DXY's recovery looks so unimpressive, right? So really, I would love to be here and tell you that, oh my God, so many opportunities in the markets, jump on, trade this, trade that, trade the other, but I'm still in wait and see mode. I think once again, probably, unless something changes like imminently, the big money will be made being short the dollar across the board, be it metals, be it commodities of any type, be it currency pairs. As I said, in any kind of way, I'm looking at the markets. I don't see a compelling argument, in the opposite direction, right? So, this is what I see. This is the only thing I can tell you. Anyhow, more than happy to answer any questions you have. Let me see, mate. Okay. This one looks interesting. Whoop. What the? I didn't do this. Okay. This one looks interesting. First of all, there is a clear change in momentum. Also extremely apparent just by having a glimpse in the RSI, right? Second of all, the move higher was undeniably impulsive. There you go. Right? Even had the nice characteristic of extreme moves like that, that its last leg higher really went vertical. Totally bananas, right? Totally vertical. Now the move lower clearly has not been impulsive, right? I mean, just compare the two of them. So coming to conclusion here, I think this has a very decent chance of having bottomed or being in a bottoming process in any case, right? So I think that above this resistance, it more or less confirms such a scenario. And it's, you know, a long, that's what I think about it, mate. What is this, by the way? Advisor says, trust advisor says, pure US cannabis. Okay. Okay, that makes sense. The whole market is high. Perhaps they're smoking this. What else? What else can I cover for you guys, girls, ladies, gents? Netflix. Okay. Yeah. Clear uptrend, right? I mean, just look at this. Unquestionably. And within that context, this is most likely than not some type of a corrective move. Now, what type of a corrective move? Can be a channel, can be a triangle, right? In any case, chances of eventual break higher, much higher than the opposite. The problem is a corrective pattern that has been unfolding for a year now, literally a year, right? Last summer, we entered this pattern. There is no guarantee that it can take another 1 month, 2 months, 3 months until it gets resolved. That's what I think. Now, equities are not my specialty, although having to do with chart patterns, it plays absolutely no role what kind of an instrument you're looking at. I've traded options in the past, several times actually, more than several times. What I would do in such a case, if I wanted to trade Netflix, for example, right, and I saw this prolonged bullish consolidation, a way to make money in this case is keep selling puts below these triangles, trend line support. Keep collecting premium, and if we break lower instead, take your loss, and that's it. But if we spend more time consolidating here, or if we break higher, you know, you make money. If we keep consolidating, you keep making money, right? So if you like Netflix, and by like, you know, you can translate it in any way you want. You might like it as a company, you might really believe in its fundamentals, you might think it's fairly valued and it can go higher, you might think it's undervalued. I think nothing is undervalued at the moment, but I'm just generally saying, you know, this is a good approach, right? Steve, historically, industrial metals have disconnected from precious metals during inflationary periods. Do you see a sell-off on this group before we resume up? Yes, it might happen. It's not unlikely. Sorry, it's not impossible. Having said that, it is somewhat unlikely, right? So not impossible, it might happen, but I think in the current environment, because it's a combination of factors that are in play at the moment, right? It's not just one, it's a combination of factors. We have big supply shortages, we have extreme monetary policy, we have extreme fiscal stimulus, we have ever increasing demand, because people have money in their hands because of bottom up type of fiscal policy stimulus. So under this kind of environment, I think it's more likely for all of this to keep climbing together. I think it's more likely. Python, I think that's Peloton, right? Okay. Back then, we talked about two scenarios, as you see, obviously. Head and shoulders, triangle, right? I'm assuming, as always, I favored the triangle, bullish triangle scenario, and as I should, right? Favoring the direction of the trend doesn't make you right all the times. It makes you right more times than not, and that's the only thing you can hope as a trader. Having said that, where are we in this corrective move? We had one leg lower. We had second leg lower. The question is, what do we have now? The start of another leg higher or another leg of a complex correction? Arguments, both sides. We didn't see an overbought reading on the daily chart. Having seen one would have been a signal that we've already found a bottom, right? Not a necessary signal, but a welcome signal. So far, the rebound has been orderly, channeled, so not necessarily showing the beginning of a new bull trend. I'm not sure. It can go either way. I think we're at the point that I would call it a coin flip, right? I can tell you though two things. First, if we break through this trend line support, the chances favor that we're definitely not done correcting lower, and there might be more to go, right? For example, that's why you always need to consider the big picture as well. What seems like a series of moves might all be in the context of a single corrective formation, right? This one, for example, right? Bottom line, in my opinion, give it more time. SCDG. A good likelihood we've broken out, right? Last time we checked it, we were there. I was again looking for an eventual break higher, but who knows when you do? We seem to have done it. And even this recent pullback, for the time being, looks like it has corrective characteristics. So I think the chances are at least decent that we've already broken out and are headed higher. Okay. Fun fact, NBIM, Norway Oil Fund, passed 12,000 billion NOK today. Yeah, it's amazing. I know. It's amazing. They have roughly $1 trillion under management. I mean, I've said it many, many times before. Norway is an oasis, I think you call it in English, an oasis in the desert of really bad economies. One of the very, very few economies that are still objectively healthy, not subjectively, just in comparison with other economies that are much, much worse, that are in much, much worse shape. Right? Norway has remained one of the few, very, very, very few economies that are properly functioning. EVR. Now, what's happening here? Has it broken higher? Might have, but you know, let's see. Something like this, let's say. So far, the move lower looks corrective, right? To make it very clear. But, you know, it's not unlikely to see more. I mean, more correction or consolidation before higher. Don't forget that we broke through an ascending wedge coming off from a super bull move, right? So we might need more time to correct here. But it looks good. I mean, even the very conservative manner within which it has been correcting after such a humongous move higher is, you know, is showing bullish character. GDX. Yeah, there we are. Okay, here's the GDX. We have broken out from this channel long time ago. It's also worth, you know, putting things in perspective, right? Huge rounded bottom. Amazing multi-year breakout through this key support resistance area 31.5, right? Impulsive move higher, corrective move lower, found support in this support resistance area. We broke through the channel and now we're consolidating above it. As long as we trade above 31.50, there is absolutely no way, in my opinion, you can turn bearish, right? Having said that, you know, somewhat like gold, I can't really say that this short-term formation, at least in the way it's unfolding as we speak, is bullish, right? Not yet. But, you know, I mean, worst case scenario, if you ask me, we're going to see something like that. That's like the worst case scenario in my mind. And that would be perfect, actually, right? It would be perfect because I'm pretty sure it would get a lot of bears super enthusiastic to see a break below 31.5. And people would be caught short at the worst possible time in this market. My opinion, this market is headed much, much, much higher. And, you know, the more time passes, the closer we get to the point that we're going to be resuming the uptrend, right? Okay, so, you know, I was afraid that we won't have much to talk about, but, you know, we always find things to talk about. So, AGI, okay, I'm going to wrap it up with AGI, Amira. AGI, what is this? Wait, here, AGI. Nope, not AIG. Different. Okay, let's see. Okay, last time we had a look at it, we were there, right? And what I said was we had a move lower. We should get at least one more leg lower. We did. Now, as it proves, unsurprisingly, many times, the correction lower is not the simplest and shortest type of formation you can have, which is like A, B, C, but it's a rather more complex one, right? Now, why do I still say it's a correction? Clearly because, you know, huge impulsive move higher, prolonged corrective move sideways, yeah, lower to sideways, right? The character of one move completely different to the character of the other one. So in my opinion, this is a correction. The question is, where do we know that it's over? I would monitor this channel, you see. So we'll know when we break through this. There we go. So currently, let's say at 9, right? 9 is the level as we speak. Now, of course, you know, it's a descending channel. As time passes, it moves lower. Okay, guys and girls, have a wonderful afternoon, evening, depends on where you are. And I'll see you again tomorrow. Enjoy. Bye.